All right, welcome to week 6 with Mastering Volumes in Trading with Urban Forex. This is a special bonus week. I want to take a moment first and congratulate you to getting this far. Okay, now a lot of the stuff that we've discussed in the last 5 weeks, it's not something to be taken lightly. Okay, if it's clicking with you, if up until this stage everything was like, I got it, it's clicking with you, it's because your price action leading up to it was a little bit solid, right? If you were going through the matching price action, the 4-course bundle, your price action and your little bit of chart timing that you have built up over time with these courses is helping you fill in the gaps with the volume, So I really want to tell you that if you do understand everything that is being covered in these lessons, you are exponentially ahead compared to the average person who's just looking at a chart, on a single chart, looking at it and saying, I see a higher high, that must mean buy. You know what I mean? So there's a big difference between where you started, where you are now. And the future looks much brighter from here on out for you. And I've been reading some of the reviews, and the reviews are fantastic. Thank you so much for the wonderful comments you're putting below each of the videos week after week. They've been really, really great. And on top of that, this bonus week that I wanted to talk to you guys about is actually going to be on higher time frames. Like, some of you guys are more focused on, hey, Naveen, I'm unable to trade on a day-to-day basis to do some day trading, per session, but I can trade. Let me get this out of the way. But I can trade, higher time frames, such as the 4 hours and daily. But there's a problem with the 4 hours, isn't there? When you look at a 4-hour chart, you're like, well, what am I looking at? So if I put a circle around these areas, okay, if I say this is your volume right here, and we just jump over to the 4-hour chart to take a look at that area, it's like, what are we looking at? It's so much of a mess, right? It's like up, down, up, down, up, down, up, down. It's super, super messy. It looks like a heartbeat, right? So when you're looking at this, it's hard to make sense of it. And we've already discussed this in the past, where on the 4-hour time frame or going up to the daily, it's recording sessions. Okay, so let's say London session is 8 hours long. We're looking at a couple of 4-hour candles and then it dies. And then we have a US session, a couple of 4-hour candles, and then it dies. You know what I mean? So you're dealing with just a section, a cluster of candles before the session ends, and then you have a dead zone, and then it comes back. Now this can cause confusion. So the question is, well then, how do you trade a higher time frame with volumes? And maybe even, can we trade, the higher time frames using volume? Obviously, in your mind, you're like, well, there's a lesson on this on week 6, so obviously the answer is yes. And yes, that is the correct answer. The answer is yes. You can trade higher time frames using volumes, and I'm going to show you exactly how and at what point can you start getting very interested on a higher time frame and seeing the bigger plays move out for the longer runs and stuff like that. So let's take a look at this piece by piece, okay? You still want to do your classes and stuff like that to make sure you're working with a pair that is going with correlation. You're not just dealing with anything randomly, right? So let's have a look at this. Let me go back to the 1 hour. So if you are a 4-hour trader, okay, let's say you're dealing with the 4-hour charts, and then you're looking at the 1 hour for an entry. So 4 hours, your big boy. So now, for those of you who do not understand when I'm saying 4-hour, 1 hour trader, that means you're looking at approximately 1 to 2 trades a week. On average. Sometimes you get more, sometimes you get 1. Or even nothing, depending on what the market's giving you that week. Yeah? So you want to keep these things in mind. So now, where'd that area go? I had kept an area for you nice and ready. Okay, because I wanted to show you. Okay, here we are. Okay, wanted to show you at what point do you get interested in this. Now, from a 4 hours perspective, if 4 hours your big boy, you're looking for a bigger cluster of a range, right? Like this. This is a bigger cluster of a range that you're looking at. You're not looking at a tiny range like this anymore. You're looking at a bigger cluster of range that pops, right? Or breaks in one direction, and you're like, okay, I got a break and I got a high increase in volume, okay? Remember, you don't always need the high increase in volume at the break. It can start increasing as you go as well, and then disappear. That's okay. But you want it during the uptrend, basically, in this particular sense. Okay, so what is this basically trying to tell us? Two things that are very important for higher time frame trading is if you have a high volume break, make sure your high volume is not at the end of the trend. You know, the little nuisances or little problematics that we discussed over the last couple of weeks. You want to make sure it's not the highest volume in the sky and it's not at the end. Okay, and I'm going to explain to you why. Again, we're doing 4 hour 60 and I'm sticking to the 60. I'm not going anywhere. I'm still on the 60, okay? Okay, so now look at this very carefully. So we got a higher volume on the move up, and to do a 4 hour 60 trade, we're looking for the 60 to do pullbacks. Pull back, pull back, pull back, go up. Give me a second set, pull back, pull back, pull back, and then go up. So we're looking for two set of things to come in. Okay? So we don't have any pullbacks until here. It is only after this point do we get lower highs and lower lows. In fact, what I'm going to do is I'm going to increase my mouse here. I'll do the same over here as well. Where is accessibility? Here. Boom, 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 boom. Okay, here we go. This gigantic mouse. All right. So it is only at this point do we start getting lower highs and lower lows, right? Okay, it should be a little bit more visible and clear now. Now, since this is coming down, lower highs and lower lows, notice along the way it's created these little ranges as well. What you want for a higher time frame is you want a high volume break to the downside on a little range on your 60. What that means is now there is going to be pressure pushing downwards, and as long as your trade doesn't just come down collapsing, it's okay. It just means now the time is going to delay and it's going to get longer before the trade plays out. So two things you need for this. Okay, two things. I'm going to repeat it. First thing, you want to make sure that your volume that broke to the upside is not the highest volume in the sky like we used to discuss, right? Let me move this up a little bit. You can see this seems to be a normal volume if we look at this to our left, right? It's not the highest one in the sky that says beep beep reversal coming up, right? So you wanna look out for that. We don't have a soup. Did I just delete the volume? 1 second. There we go. Here. So that indicates a reversal. Plus, we don't want the high volume to show up exactly at the end. Okay, at the end of the uptrend before the pullback comes in. That's also a little bit of a problematic area. So we don't have that situation, which means this is still a pullback for a buy as long as the pullback volumes are not high. Okay, so this pullback volume, when this thing was ranging, it pops downwards. Okay, here is your volume. If I take you all the way down, dead, dead, and then when the break happens to the downside, we have high volume. This means the sellers are here. Good. Let them come. We want the sellers to come for a 4 hour 60 trade to happen. But this high volume is nothing compared to that guy. Starting to make sense? Starting to make sense? What this is going to do, what this little range pullback is going to do, is it's going to cause the markets to look in the sell direction longer. Okay? As long as all of this pullback comes in, they're looking for a continuation to do the sell side. Now, this is how your trade develops. This is your rubber band coming in lower, pulls back lower, and then it starts to do some kind of a V formation, But you know this V formation wants to go down again because of the high volume break to the downside. And that's how you get your test phases. Does that make sense? Is this starting to click a little bit? This cause in delay in time because of the high volume makes it interesting for those of you guys who are looking at a higher time frame play. Okay, so you can come into your office today and be like, what do I got today? Okay, I got a high volume break. Okay, and you're like, give me a pullback and I'll take a look. You come back the next day and the markets are here, you're like, no pullback. Okay, let's keep waiting. You come back the next day. Okay, you're starting to get a pullback. You write it on your whiteboard or your notebook. You tattoo it on your dog. Please don't tattoo your dog about this. But you write it somewhere important where you can keep track of it, right? You can tell Siri or Mr. Google or anybody like that. You can update them to remind you to check again with a little bit more priority now. Okay, so when you come home from your office job or whatever you might be doing from your business or anything, you might look back at this now and be like, come on, give me a high volume break to the downside and hold. Okay, and once the high volume to the downside kicks in, you're like, yes, now I know this is in my territory. Okay, it's like you're the big boy now. You're like, good, excellent. Let those players sell because I need that sell to come down so I can buy a lot of it. Make sense? Okay, so this time delay works in your favor as a larger player. So as this thing starts coming up, okay, starts moving up, moving up, moving up. Let me clean this up a little bit, give you a nice little line over here. That was the breach line, and your little range pop to the downside, break to the downside with high volume. Okay, I'm going to circle that over there. Okay, so this is your high volume break to the downside, and you have a high volume reversal coming right back at you. Okay, now this becomes interesting now. Okay, and I'm going to explain this into the next video as well, because I'm going to, it's a bonus week. So bonus week doesn't mean just one video. I'm going to give you another one, right? I'm going to give you another one, which is going to help you even level up even more. Okay, so notice one thing. We're going to talk more in details about this in the next video that you're going to watch immediately after this. But notice one thing. When the prices are rising here, the volume is high. Okay, so it looks like it's reversing. It's a possibility. We don't have a V formation. It looks like it's reversing. Then it goes sideways. It's almost like you can read that. I believe that could have been a test 1 on the 15. Remember, because the 60 broke with a high volume to the downside, so the people on the lower time frame are looking at this now as a 60-15 trade, right? They're like, okay, pullback 1 just came in, and then it rains a little bit, and then it went upwards, but this time when it went upwards, look at that, no volume, artificial move. This is very good for test 2. This is very good for test 2 because this tells you the sellers will try it again. Okay? And as this thing goes up and up, reaches this area as it's about to roll, you see your volume start to increase again, hits down for a sell, and then your test 1 down begins for your 60 minutes. Okay? Your test 1 down begins. So it's like this turned out to be what looks like your V formation. Okay? But we don't know it's a V formation because those of you who are watching this in the elite community are understanding that for a V formation, we need more data to the right. Not to the left, we need more data to the right to confirm this V formation is legit. Correct? So, at this stage, we're like, okay, looks like my sellers are coming back. So I'm not very excited that, okay, look, my V formation is done. That's my test 1. That's my test 2. Let me just hit it for a buy. Come on. Let me just hit anything for a buy. Oh, slow it down. They need to develop and take it down for their sells. And that's just test 1. That's how long a 4-hour 60 trade takes. It takes time to develop. Okay? All right. So once this thing starts to go down, you know that you're not interested in the downside. It is just a temporary move for the smaller time frame traders, and that's okay because it is under your radar for a buy. You don't want to switch to a sell side. Don't do that. Don't do that. You don't want to switch to the sell side. You want to be very careful and make sure you don't jump the gun on this. So as the sells are coming in, okay, coming in, all the way down till here. Let me move the screen a little bit to the right so you guys can see the volume again. And prices are coming all the way down till here, and then they start going sideways. Here we go again. Let me bring the line down. Sorry, it's not so straight. And down. Here we go. All right. And then we have a break. Again, no volume. No volume. But anyways, we knew that this whole flow is our test one. And we're like, fantastic. Fantastic. Okay. We need our test one to happen. Okay. In fact, a better way for me to draw it would be like this. Sorry. Okay. This is a better way to draw it. I would say this is our test one. Okay. Now we need our test two to come in, and similar things. Here is a range here, and then this market starts to break from this candle. Okay, let me put a horizontal line, vertical line. Here we go. And the break happens, no volume. Then the next move down happens. Yeah, there is an increase in volume, but is the increase in volume higher than the range volume? Okay, the range. Look at that volume right there inside the range. It's not there. Okay, it's the volume range is this high, and the break volume is around the same height. So it's not powerful enough, and you're like, fantastic, fantastic. We're getting down to our test number 2 now. And as this thing develops and you do your rubber band man, you read the whole story, this whole trade takes you from, in this particular case, this is in June, takes you from midday of June 7th all the way to June 13th. It takes that long to develop. It takes that long to develop until your trade actually takes off. Okay? And your trade would then be something similar to this. You would have a entry somewhere over here once the market starts moving, or you wait for market open. Stop loss is a little bit healthy, and take profits at the recent high or higher, depending on what kind of class of trade you're looking at. Okay? That's how a larger time frame trade develops for you. And if you have a decent class, your trade works out fantastically, and it works out in your favor much more smoother. Okay, so again, just a quick recap. You need two things for a higher time frame trade to work. One, you need a high volume break that needs to maintain, which is from a bigger cluster. Cannot be a small range. It needs to be a decent sized range where you can see it on the 4 hours, right? It's not like, oh, one candle, and then a break. Oh, that looks like that might have been a range. No. No might have business. It needs to be a range. Your dog needs to tell you that's a range on the 4 hours. Okay? When the dog says it's a range on the 4 hours, it's a range on the 4 hours. Okay? Okay? Hopefully dogs will say that one day. But once that happens, you want to make sure that that high volume is not the highest volume in the sky. Not. Okay? You want to be careful. It's not the highest volume in the sky. And the next thing is all the pullbacks following to that must be on a lower side. Okay? The second thing that you need to keep track of is you need a high volume break to the downside. If you can get this 2 times, this trade can even turn into a daily. It's going to take much longer, and it's going to grab the interest of the larger players as well, who are looking at this from a daily time frame. Because then it's like your rubber band man's taking longer. He still has energy. Okay? So the more energy he has, and the higher this area is waiting for you, as the trade sets up more and more and more, it becomes more interesting. Notice this thing right here. You see that spike before going? Yeah, if you have this dream of I'm gonna trade the 4 hour and the 60-minute time frame, but I'm gonna grab my entry from the 10-second chart, and then I'm gonna have my stop loss so tight you'll need a microscope to see it. Dream on. It's not gonna work. It's not gonna work. You need to respect the time frames by going no more than 2 time frames apart. If you have your stop losses inside your 2 time frame analysis, you will survive. If you push it to the 3rd time frame, your odds of surviving become 50-50. Let me repeat that. If you begin to take your entries and put your stops based on your 3rd time frame, you will not be able to ride the whole move. And your odds of surviving the whole move on that stop loss is 50-50. What's going to happen is this. Every time you take a trade, you take all this research, you take all this time, all this headache to research all of this stuff to grab a trade that has a potential of making a higher high. You will have an entry like right there. You will have a stop loss right there because you're doing more precision, or your stop loss right there. And you're like, okay, I got it, man. I got my 3rd time frame or 4th or 5th time frame stop loss. And you're taking it up. You will only be able to run away with this price at most. You won't be able to ride the entire move. If you ride the entire move, you've got a very strong pair. The big boy is ultra desperate. Okay? Chances of that happening are rare. It's like finding a leprechaun. So, trust me when I say don't push it. Don't try to make 10 million Rs in one single trade. Don't do that. The goal is to make a lot of money, not a lot of Rs. Okay? If you have this problem of trying to grab a trade from the smallest time frame possible to get the maximum amount of Rs, you're going to have a lot of trouble. Okay? You'll hear a lot about this on the money management course. So when I release the money management course, or if it's already out and you're thinking of getting it, be prepared that I'm going to be battering you with information like this, telling you, don't do this, don't do that, be careful of this. Of course, all with love, right? The Naveen Prithiani Urban Forex love, So I'll teach you in a nice way, but please, take it from my years of experience and expertise that I've burned myself so many times with the smaller stop losses. I've experimented with it in all different kinds of ways. It just is very, very dangerous. Okay? And this is why even when you can teach all of the stuff that I've taught you to the next person, because they're so anxious to make money so quickly, they will always be in the red. Okay? In the red meaning negative. In the red, yeah, negative. Because they just cannot break this barrier of, hey, 1.5 R is okay. Okay? 1.5 R is okay. Hey, 2 R is okay. 2.2 R means I'm rich. This is a problem for most people. Most people think if I don't get a 5R or a 10R, and if the neighbors, everyone around me watching is not saying, good job, I can't sleep at night. You know what I mean? As a trader, you have to get over that outcome and saying, it doesn't matter. It doesn't matter. I just need to perform. Do better, get to the next level, and trade big. Trade large lot sizes. That is the goal. The goal is not trade with $1 and then make a massive amounts of Rs. That it will take very, very long. I've tried. It's not like I'm telling you not to do it. I've already done it. I've tried it. And it's very, very difficult to do it that way. Okay? So as a shortcut, you can follow my way as I'm telling you. Obviously, if you want to experiment and try it your way, maybe you find a solution. You're welcome to do so. Just know that from the years I've put in, it is very, very difficult. And I am very, almost want to say, very analytical when it comes to research. I will go in deep and dive in, and I will spend months and months, years and years, and thousands of dollars in research. Okay, so all right. Sorry again, this video has gone on for long. It is now 25 minutes into this video. Let's cut it right here. Let's jump on to the next video. I want to show you something interesting about test number 2.